Tesla deliveries, they came in short of expectations.
Berlin, Austin losing billions of dollars right now.
Tesla investors disappointed over the holiday weekend after the company posted its Q2 delivery numbers.
JP Morgan analysts reiterating an underweight rating on Tesla with a price target under $400.
Tesla sounds like a regular old dinosaur automaker at this point.
If the economy is going to continue to slow, now this demand that has generally held up pretty well for Tesla, that may start to weaken at a time where their cost for batteries for other raw materials remains high. That might pressure profits and might put further pressure on the stock. Yeah, I'm going to need about $80,000 in incentives to get one of these electric cars. But I'm just saying, but again, I'm a gas guy.
In a shocking, unforeseen turn of events, the mainstream finance media seems to be a little bit negative on Tesla stock at this point in time. And just for the record, this point in time is early July 2022. And Tesla stock has closed trading for the day at about half its 12-month high. Yeah, one more time. Tesla stock is half price compared to where it was less than a year ago. And the mainstream finance media is an absolute FUD tsunami. I wonder why that may be. Anyway, let's get into the video. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks. Check out the links in the pinned comment below. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. So check out the links in the pinned comment below, and thanks for your support. Now, as I said in the intro, it's certainly unlike the mainstream finance media to spread FUD, negativity, lies, misinformation, distort the facts, and paint a negative narrative about Tesla when they're actually slaying it. So it's very difficult for me to understand why exactly this is happening, but happening it is. I've put together a supercut, a short compilation of some of the comments in the mainstream finance media regarding Tesla's recent Q2 deliveries, the future of the company, EV demand, the whole kit and caboodle. For some strange reason that I certainly can't explain, there's a pungent stench of negativity in almost every breath. So let's hear what they have to say.
We've sort of had mixed messages from Elon Musk about the cash burn that's going on. And indeed, they didn't seem to paint the picture that they'd be closing down some of their manufacturing units for some sort of break.
Yeah, there have been a couple of different reports out of China and Germany that the plants are going to be offline for a couple of weeks this month. The half glass empty would say, oh, God, this is what a terrible time to be offline, right? They just came off of this sort of bad quarter where production was paused because of COVID. Now they're, shutting down production again. The glass half full would say, well, this is all build back better. Auto companies typically take plants offline, especially around the July 4th holiday here in the U.S., to kind of do retooling, to do equipment maintenance, and you can often get better production after you've had an opportunity to kind of do that. So we'll just have to wait and see what production is like going forward.
Now, I have to give credit here. We've heard both sides of the story, the glass half full and the glass half empty. However, I would suggest that the glass half empty scenario, oh my gosh, this is terrible, is of course actually the brain half empty scenario. Tesla's told us they're doing some upgrades, improvements. This is normal. The end result will be higher output from these factories. This is a good thing. The fact that Tesla's in a position where they can take the time for a little bit of downtime on these lines to make upgrades is actually very good. So far, so good. Not too much negativity. Got a funny feeling, actually I already know because I've already put these edits together. This is about as good as things get.
The company did say that they had a really strong production for June.
Yeah, what was it? 254,695 deliveries for June, which was the most that they've ever made in history. But it actually was still less than the market wanted.
Well, that was actually 254 was the deliveries for the quarter, which was a dip from the first quarter. Mm-hmm. But the market kind of expected that because we knew that China, which is their most productive factory, had been offline for several weeks because of the COVID lockdown.
Well, I've got to give some credit where it's due. It appears Miss Hull actually knows what the fuck she's talking about when it comes to Tesla. A stunningly rare situation from any of the reporters covering this company. The fact that she was able to make the correction there, that was the full quarter, not June, and no, it wasn't a disappointment because we already knew about the Shanghai shutdowns. Very impressive. Shouldn't be impressive, but unfortunately it is.
But yeah, no, it's definitely a mixed bag. I mean, I think there's going to be a lot of questions about production and the ramp up of the new factories in Austin and Berlin when the company reports earnings July 20th.
Yeah, Berlin, Austin losing billions of dollars right now because there's a ton of expense and hardly any output.
Now, I don't want to pick on the mainstream finance media too much here. After all, Elon Musk did make comments to this effect. but they're just descriptive of reality and absolutely to be expected. When you construct a gigantic new factory and you're producing complicated manufactured products, thousands of parts and processes involved, it takes time to ramp up. There isn't an automotive manufacturer on the planet, in fact, probably in the entire universe, that doesn't lose colossal amounts of money while ramping their facility up to its final volume. But the very fact that Elon Musk described reality, ramping up production, gives the mainstream finance media plenty of fuel for their FUD. And more likely than not also causes spontaneous erections in many of the self-hating basement-building adult versions of Tesla Q, who say, Elon, oh my god, Musk is burning billions of dollars, they're going bankrupt, finally! Let's move on.
Musk seemed to be telling Tesla owners back on May 31st. Is he painting, in general, a gloomier picture or an upbeat one? What do you think?
Well, I mean, I think he's always been fairly, to his credit, I think he's always been fairly frank about the state of the economy as a whole. And this is a man who is now the longest running auto industry CEO. I mean, he's been the CEO of Tesla since 2008. He steered the company through the first recession, or the most recent recession in 2008, 2009. The company came very close to bankruptcy during the Model 3 ramp in 2018. And it is this dance of like, you're investing all of this money into getting new production capacity online, but until they're actually producing cars and you're delivering the cars, you're not really making that much money. So I think he's actually gotten fairly good at kind of managing cash and figuring out which levers to pull. Demand does not seem to be a problem, at least at the moment, and Tesla has raised prices quite a bit to kind of cover the costs of, higher energy costs and higher commodity costs.
Once again, some fair and reasonable comments from our guest. However, at the same time that we're hearing a lot of reasonable comments from the guest here, on screen is the title, the headline, Tesla's slip up, as if Tesla has made a mistake, as if Tesla somehow f***ed up instead of Shanghai bending Tesla over and f***ing them in their sleep. Remember, the whole reason that Tesla's deliveries are down is because of the insane, futile, fascist, inhumane shutdowns in Shanghai that forced Tesla's factory closed for about 3 weeks, meaning it also had to start slowly ramping back up. The headline, Tesla's slip up, almost implies that Tesla f***ed up, not that Tesla got f***ed, and this is important. In addition, the subheadline says, global vehicle deliveries came up short the last 2 quarters. There's definitely a conflict here from the comments of our guest and the way that Bloomberg is framing Tesla's recent deliveries.
And let's face it, making a lot more EVs than anyone else out there, Dan. And lastly, just the mood music around Shanghai in general, because again, we were worrying about further lockdowns coming from those cities as the zero COVID policy seems very much still in effect. How much are we worried about the longer term bet that Tesla has made?
I mean, I think that, Tesla's footprint in China is so important to the company, and it's also just very important to China. I can't see that they are going to, let that plant, fall by the wayside. I mean, people were living in the plant, in the closed loop system for as long as they possibly could. So, the geopolitical questions about China vis-a-vis the U.S. are always really interesting ones. But no, it's a very strategic plant for the company, for sure.
Tesla investors disappointed over the holiday weekend after the company posted its Q2 delivery numbers.
I told you that first clip was as good as it gets. The aptly named Yahoo Finance claiming that Tesla investors are disappointed by the company's Q2 production and deliveries. I do not believe this is accurate. I don't think any Tesla stock investors whose brains work were at all disappointed because they already knew about the fascist shutdowns in Shanghai. But don't worry about reality. Instead, worry about what the mainstream finance media is telling you because they know the truth. And you are a Tesla stock investor and therefore you are disappointed about Tesla's Q2 deliveries, aren't you?
Deliveries came in short of expectations at around 254,000, though the production came in at 258,000, which Tesla said it was its highest production month in its history. And Brian, a few things to break down around this. Of course, the majority of the production and deliveries, they still continue to come in Model 3, that mass market vehicle, and then the Model Y as well, which is essentially just 75% of the same as the Model 3. And so with that, you have some of the production synergies there. But this is also a time where we know that there were significant price increases that are also being started to roll out. And so I think this broader theme of the average selling price that we start to see for Tesla vehicles.
Tesla, I think the street is out here this morning. A lot of analysts I've seen are cutting their estimates for the back half of the year. You have JP Morgan analysts reiterating an underweight rating on Tesla with a price target under $400.
Well, I can't let that one slide. Here we are over on tipranks.com. Ryan Brinkman of JP Moron with a 1 out of 5 star rating. Average return, negative 2% on stock recommendations over the last 1 year. With a $385 per share price target on Tesla stock, you fucking idiot. Stunningly, simultaneously has a hold rating on Rivian. Maybe this is a one-off, I don't know. Maybe Ryan's starting to suffer from early signs of dementia, something along those lines. Let's check out his history on Tesla stock. Average profit on stock, minus 87.3%. Success rate on stock, 38%. Far worse than a coin toss. Has had a sell rating on Tesla stock since, $250 per share back in mid-2020, 2 years ago. Was advising people to sell Tesla stock. More than tripled since then. Let's go back a little bit further. Okay, I know it's hard to see here because this clown has been covering Tesla stock for a literal decade. Not one buy rating on Tesla stock over the last decade. Some hold ratings back in the day in 2012, 13 and 14, then a downgrade to sell. Been recommending investors sell Tesla stock since, call it $42 per share in 2015. The entire fucking time. Sell at 46. Sell at 30 something. Sell at 44. Sell at 48. Sell at 69. Sell at 62. Sell at 59. Sell at 46. Sell at 59. Sell at 274. Sell at 380. Sell at 604. Sell at 659. You guys get the picture, right? An absolute fucking moron with zero, I want to repeat, zero credibility when it comes to Tesla stock. Ryan, give the fuck up, dude. I don't know how you're employed, honestly. He's got a fucking buy rating on Government Motors. Expects the stock to double. Look at this. His GM stock recommendations are the inverse of Tesla. Over this same period of time, going back to mid-2020, sell Tesla stock the entire time, buy Government Motor stock the entire time. Let's go back a little bit in history. Isn't that amazing? Miraculous, in fact. Going back to 2012, a literal decade. Dipshit McFuckwit, Ryan Brinkman here has been recommending investors buy Government Motor stock the entire time. The entire time. Nothing but buy ratings on Government Motor stock the entire decade. And nothing but hold and then sell ratings on Tesla stock. What a truly credible analyst. We're talking genius level shit right here. Expects Government Motors to double and expects Tesla to halve. And surprise, fucking prize. What do we have here? Ford Motor Company again, the same shit. Buy. Let's go back. A decade. Buy. Does anyone get the impression that Ryan Brinkman is an absolute fucking moron and doesn't understand the automotive industry? Nah, I'm just kidding. What a genius. You should follow these tips for sure. You too can look forward to returns of minus 3% or maybe even better than that. In the case of Tesla, minus 87%. Well-earned round of applause to Ryan Braindead Brinkman. Good job, buddy. I'm just kidding. Terrible job. In fact, you shouldn't have a job. You should be unemployed. Forever unemployed within Wall Street. Seriously, though. What an absolute fucking dolt.
And now the big concern is June appeared to be pretty strong for Tesla as that production ramped up. But the street has now pivoted to what the second half of the year might look like for this company. And a lot of folks are starting to say if the economy is going to continue to slow, now this demand that has generally held up pretty well for Tesla, that may start to weaken.
Just for the record, Tesla will continue to sell every vehicle they make for years to come, probably the entire decade. And I think if there's any investors out there who are concerned about Tesla's demand declining due to the current economic situation, I would be far more concerned about your declining cognitive faculties. That is, of course, assuming that you're a well-informed Tesla stock investor, because, if you're not a well-informed Tesla stock investor, you're also a moron, but for different reasons. Now, let me explain why I suggest that people who are concerned about Tesla's declining demand, potentially due to the economic environment, are idiots. Assuming they're well-informed. Otherwise, they shouldn't own Tesla stock in the first place. Tesla has sold every single vehicle they've ever made in the history of company. They've always had more demand than they've been able to meet with supply. In addition, over the last 18 months, Tesla's increased prices across the board by 10, 20, 30+% on their vehicles, yet they still have wait times 3, 6, 9, 12+ months depending on where you're ordering around the world and what trim you're after. It is not reasonable to expect Tesla will suffer a meaningful decline in demand to a point where their production actually exceeds demand for their vehicles anytime this decade. It's just not reasonable. If we didn't have evidence, clear indicators that Tesla has obscene amounts of demand, customers are willing to pay significantly above what they were previously paying for their vehicles, hence the wait times have actually grown even longer despite the massive price hikes, then there may be reasonable cause for concern about declining demand impacting Tesla during a recession, people thinking the world's ending and so on. Oh yeah, bad time to point out what happened in 2020 when everyone thought the world literally was ending, except this guy who said Tesla would still sell every vehicle they made, even though people thought vehicle sales would collapse, and then Tesla sold every vehicle they made. Remember that? I do. The point here, Tesla's going to sell every vehicle they make over the next decade. If you don't understand this, You just don't understand this. This isn't something that is up for debate. This is something you either know or don't know. I know this sounds really obnoxious and arrogant. Oh, how could you possibly know that, you dickhead? And I could spend 42 minutes explaining in detail, but here's a short story. Tesla has insane pricing power. They've already got ridiculous margins. They've already hiked prices ridiculously on their vehicles just to ensure wait times don't get too absurd. Yet they're still already absurd. As Tesla scales up production, their cost to produce vehicles will actually continue to decline over time, meaning their margins are going to grow even bigger, or they can lower prices. Tesla has a lever they can pull literally and reduce the price of their vehicles 10, 20, 30+% and still be making a profit on them. And as we know, a linear decrease in a price causes an exponential increase in demand. So the more vehicles Tesla makes, you guessed it, the more demand there theoretically will be for these vehicles because Tesla has all the power. They can make the vehicles cheaper. They can sell them cheaper if they need to, and if they don't, well, they can just keep making truly absurd profits. Some people just don't get this. They think in their head, the price that Tesla's charging for their vehicles today is the only price they can possibly charge, and the only reason they're charging that price is because that's how much it costs them to make the vehicles. They don't realize Tesla's already stacked the 30+% margin on these things, and prices are going to continue to decline as Tesla doubles production capacity and then doubles and doubles again. The cost to produce the same vehicle is going to fall by 10, 15, 20+%. They have absolutely insane pricing power today, and the more vehicles they make, the more insane this pricing power gets. One more time, Tesla will sell literally every single vehicle they make for the entire decade. You can count on it. And I know this sounds obnoxious, but it's important to understand. If you disagree with this point, you simply don't have all the information. Just like if I was to say the Earth currently orbits around the Sun due to the influence of the Sun's gravitation, the distortion of space-time. If you disagree with this thesis, you simply don't know what the fuck you're talking about. Same with Tesla's demand.
At a time where their cost for batteries for other raw materials remains high, that might pressure profits and might put further pressure on the stock.
Yeah, and it continues to come back to where the consumers are buying in and opting into new electric vehicles. We know that searches over the course of this year, given some of the higher energy and gas specifically prices, consumers have been searching more for electric vehicles. It's just a matter of when they might get delivered. And over an extended period of time, what types of credits for the companies that are operating the production capacities, whether that's Ford, whether that's GM, whether that's Tesla, what type of credits they're given to allow them and enable them within that production to at least have an alleviation of some of the pressures that they're seeing on the input costs to getting vehicles out there as well right now?
Yeah, I'm going to need about $80,000 in incentives to get one of these electric cars, Brad. I'm just saying, but again, I'm a gas guy.
What an odd thing to say, but might explain a few things, including why Brian has been so anti-Tesla over the last few years. I'm a gas guy? I mean, this is just such a weird, emotive thing to say. Don't get me wrong, consumers are welcome to have their own preferences. But a logical consumer, and let's be clear here, most consumers make purchases emotionally and then try to justify logically after they've already decided emotionally. But a logical consumer looks at the number and goes, oh, fancy that. It's actually cheaper for me in terms of total cost of ownership to buy a Tesla Model 3 than a Toyota Corolla over a 5-year period of ownership. EVs are safer by default, lower center of gravity, extra crumple zone because of no engine, blah, blah, blah. They perform better by default, especially acceleration. They're much cheaper to own and maintain. They're much cheaper to recharge versus refuel. And if you're talking about a Tesla specifically, the features, functionality, over-the-air updates, I mean, a gas car can't even come close to competing. So when somebody like Brian here says, I'm a gas guy, what I hear is, I'm so emotionally attached to the idea of being a gas vehicle person for some strange reason, I'm not sure why, that I'm willing to say in front of however many 12 or 13 people who actually watch Yahoo Finance that I'm a gas guy and you'd literally need to pay me to drive a Tesla or another electric vehicle, which is in essence what Brian has said here. He'd literally need an $80,000 incentive. In other words, you'd have to give him a free electric vehicle in order for him to drive one. Very strong emotional response. It certainly explains a lot, but it's also laughably irrational. And again, I understand consumers are often irrational, in fact, almost always irrational, but this is just a really strange thing to say out loud. Imagine if your doctor said, hey fatty, you're about to drop dead of a heart attack because you eat too much sugar. Please stop eating so much sugar, you fat f***. To which you respond, you'd have to pay me to stop eating sugar because I'm a sugar guy. I mean, enjoy your heart attack, Brian.
As the EV giant faces ongoing supply chain challenges and factory shutdowns. However, despite these headwinds, Tesla reporting June 2022 as the highest vehicle production month in the company's history. So for more on this, let's bring in Yahoo Finance's Rick Newman. And Rick, so it's an important milestone perhaps, but also a little bit of disappointment in this latest report.
Yeah, Tesla sounds like a regular old dinosaur automaker at this point. Trying to, burnish their disappointing quarterly number by just pointing to that June number.
Wow, what a f***wit. What an absolute f***wit. Let me listen to that again. I mean, he didn't just say that, did he?
Yeah, Tesla sounds like a regular old dinosaur automaker at this point, trying to, burnish their disappointing quarterly number by just pointing to that June number.
Absolutely unbelievable. Now, unfortunately, I have already handed out the 2022 Dunce of the Year award. So let me see, what else have I got? I've got the Fuckwit of the Year award. I mean, maybe Rick's deserving of that, but I just want to point out the absurdity of what this absolute moron just said. To suggest that Tesla's just like a dinosaur car company, aka a legacy automotive company, who are trying to brandish their quarterly results by pointing out that June was the highest production month ever. Let me explain why this is one of the dumbest things I've heard anyone say about Tesla all year, and I do actually mean that. 1. Tesla's quarterly deliveries, despite what Rick, or should I say Dick, said, were not disappointing. They had a factory shut down. No one was disappointed who knew about this. We did the numbers going, okay, cool, they're going to lose about 100,000. Okay, cool, yep, no problem, done. They were right in line with expectations. So 1, wasn't disappointing. And 2, the reason that Tesla mentioned in their press release that June was their highest ever monthly production was simply to inform investors whose brains work and actually want to be informed that Tesla has now ramped production up to previous peak levels following, that's right, the shutdown of the Shanghai factory. This was just to provide important information to investors, not to fluff up the quarterly results, which weren't disappointing. I don't think I've ever heard Rick say anything reasonable about Tesla. I don't know if he's the dumbest person to ever walk the earth or up there, or he's just got a bug up his ass about Tesla specifically, but he just never says anything that makes any sense about this company at all. Never knows what he's talking about. Every time he opens his mouth, he self-immolates. But then again, I've only ever seen him talk about Tesla because I don't spend my time watching Yahoo Finance except to see what they've got to say about Tesla. So maybe he's well informed on everything other than Tesla. But Rick, please, dude, stop talking about Tesla. Please, I'm begging you. I don't want to be roasting you here. I feel like I'm picking on someone. I'm intellectually punching down many standard deviations. It just doesn't feel right. But if you're on the mainstream finance media and you say dumb shit about Tesla, I'm going to have to point out that you said dumb shit about Tesla and why it's so dumb.
But overall for the quarter, they were down 18%. And importantly, of course, they were down compared to estimates. So we're seeing the stock down here. Elon Musk has pre-explained this, if you will. I mean, he has said they're still really working hard to get the new factory in Austin, Texas up and running, and Berlin as well. And then, of course, they had those COVID shutdowns at their Shanghai factory, which at this point you could argue is their most important.
Oh, look at that. Rick's starting to redeem himself. At least he is aware that the Shanghai factory was forcibly shut down, not Tesla's decision during the quarter, and that did impact delivery numbers.
So Tesla clearly just suffering from two things. One, it's got two new important new facilities that are just getting started, and then shutdowns in China. So that could be reason to expect a rebound from Tesla in the third quarter.
Well, at least Rick is ending on a semi-reasonable note. But, Rick, we're never going to forget.
Tesla sounds like a regular old dinosaur automaker at this point, trying to, burnish their disappointing quarterly number by just pointing to that June number.
And now a final glimmer of hope. We may be about to hear from a Tesla stock analyst who actually knows what they're talking about, who actually says some reasonable things about Tesla. He is hoping.
I think a lot of the concern around Tesla have been around the ability to produce, so essentially the supply side. Some of the weakness we've seen in the second quarter was highly predictable. It was basically the result of COVID shutdowns in Shanghai. And so the numbers that Tesla delivered in the quarter were actually better than we had expected and bang in line with what the street was essentially looking for.
Wow, what a contrast. Moments ago, we heard from Dick, who claims that Tesla's deliveries disappointed and missed expectations, so much so that the company had to resort to the sneaky tactics of legacy automotive manufacturers trying to fudge the numbers a little bit and hype up their quarterly deliveries that disappointed investors. And now we have an analyst whose brain is not only engaged, but actually works, pointing out, hey, they're actually better than expected given the shutdowns and they're right in line with Wall Street expectations.
A pretty robust execution despite those challenges. The reason we remain bullish and actually we feel it's a good opportunity now is really looking forward. As part of its press release, Tesla essentially said June was the best quarter, the best months in history from a production point of view. That means that it's really lapping some of these production issues. China is back on track. The other, factories are on track.
This really is music to my ears. An analyst covering Tesla stock in the mainstream finance media who actually knows what the fuck they're talking about. I shouldn't be so impressed, but this is just such a rare sight.
And therefore, I think the second half will actually look particularly strong. The company is on right now retooling Shanghai to even boost capacity by another 300,000 units. It's also boosting the number of shifts in Berlin. We believe the second half could actually be quite strong, and then some more in 2023.
Big picture, I assume based on what you said, is that you still believe that fundamentally Tesla is mostly constrained by supply. In other words, we don't have to be concerned about the pace of demand, even if we're all looking for a potential recession in parts of the world coming up?
Obviously, it's a very important question. So based on existing data, we could track essentially the wait times, to get your car. If you place a reservation, when would you get your Tesla? There has not been any compression in wait times. In most cases, whatever the model is, whatever the geography, you would have to wait several months, often into 2023 in order to get your Tesla. So there's no sign so far of any sort of compression in demand, despite Tesla increasing prices by 10 times in 2021 and multiple times again in 2022 and keeping up with inflation. So far not. I think on a go-forward basis, it's still a very valid question. If we go into a recession, my point would be, look, we're essentially looking now at backlogs that stretch, year long or more in terms of ability, to supply. So even if demand took some sort of hit, we'd still be looking at some pretty solid volume trajectory. Let's not also forget a big piece of the Tesla story is about their own supply, but also about new models. Next year in 2023, we should get the Cybertruck. This is an all new segment, an all new model. We don't have a fresh mark to market of how many reservations there are, but there's certainly some noise out that it could be 1 million units or more. This is all new. This is all new customers. And I would think a decent portion of the reservation holders would actually come through.
All right. Well, we do have to watch that demand pipeline. So far, it has not really buckled.
Nor will it any time this decade. You can count on it. Quite a mixed bag in today's video. It's nice to end on a good note. An analyst covering Tesla stock who knows what the fuck they're talking about. A rare sight indeed. But unfortunately, the majority of this video, some highlights of the mainstream finance media completely missing the mark, getting their facts wrong. I mean, some pretty fundamental errors. We heard a Bloomberg host there mistake Tesla's quarterly delivery numbers for June. The same thing happened on Yahoo. I mean, wow. Then of course, Rick, please just give up, dude. And Ryan, please also just give up, dude. Opening their mouths and immediately self-immolating. The silver lining for Tesla stock investors, of course, while the mainstream finance media continues to get their facts wrong, spread fear, uncertainty, and doubt about Tesla, and there's still morons on Wall Street from supposedly credible firms like JP Moron with like a $450 price target on Tesla stock, in essence expecting Tesla stock to halve at the same time they expect government motor stock to double. This kind of disconnect between the facts and reality versus the fiction and the so-called expert opinions can potentially create a great buying opportunity for intelligent long-term investors. Once again, I point out that Tesla stock, as I record this today, around $730 per share, $700-ish billion market cap in July 2022. What the actual f***? So, hope you guys and girls have enjoyed today's video. And lastly, don't forget to join Patreon with the card in the corner or the link at the pinned comment. You'll gain up-to-date access to my Tesla stock price targets out over the next decade in the bear case, the base case, the bull case, and the hyper bull case, plus access to well over 100 exclusive Q&A videos, dozens of other exclusive videos, and loads of perks. So, I'll see you over on Patreon. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.